Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBPUSD, the cable for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So this is a 4 hour chart of GBPUSD, and at last we saw GBPUSD breaking down the trend and falling. Okay, I have been telling about this fall, okay, for the last couple of days, and at last we had the fall. Ultimately, market settled at 1.2140. So before I proceed with the chart, I would like to show you an article. Bank of England hikes rates by 50 basis points. GBP USD slips lower on fourth split. This one is important. See, this is an article from dailyfx.com. You'll get it on dailyfx. The latest Bank of England policy decision revealed a three-way voting split with 6 out of the 9 MPC members, MPC means Monetary Policy Committee, voting for a 50 basis point rate hike, 2 members voting for no change, and the final member voting for another 75 basis point rate hike. The MPC noted that the UK was expected to be in a recession for a prolonged period, while inflation was expected to remain at highly elevated levels in the near term, before dropping sharply from mid-2023. Overall, the short-term outlook for the UK economy remains negative, and this is now starting to show in sterling. So GBP USD may remain weak for the next couple of days. It's settled at 1.2140, and you can see that this is also the Fibonacci 23.6% retracement level. So the market opening will be very important for GBP USD, because when GBP USD was in uptrend, okay, and it was trading above the trend line, okay, I clearly mentioned a couple of times that though the market is trading above the trend line, but it was losing momentum. So when the market fell below the trend line, it was not a surprise. In fact, we were ready for this move. So on Monday, if market slips, if you see market falling below this particular level, 1.2120 level, we can go for another sell position again, because overall, as we can see, that the market sentiment is not very strong right now. So as a result, there may be a further fall on the chart of GBP USD. In case market takes support on Monday and market starts going up, then that's your personal decision. I will not comment on that. Personally, I will avoid taking any buy position on the chart of GBP USD right now, especially right after the market opening. So market opening will be important. After the market opening, if you see that market is going down with good volume, means big red candle, you can go for a sell position. But if you see that market is slow, market is dull, and market is trying to take support, then if possible, try to avoid taking a buy position at 1.2120. Usually we do not get to see much movement or volatility during the first half, especially during the Asian and the European session. So by US session, if you see market going up, then if you want, then you, with proper risk management, you can take a buy position. But personally, I will avoid. Okay, so if market breaks 1.2120, then the next support will be around 1.1950, 1.1900. This is a whole support zone because of Fibonacci as well as the presence of 200 moving average. Okay, so we have one good support on the chart right now, that is 1.1950 to 1.1900 on the chart of GBP USD. And remember, I was talking about the market struggling around the 200, the 50 moving average on a weekly chart. And sadly, market failed also. You can see it, though market tried a lot, but ultimately market surrendered. Okay, so on the weekly chart also, we can see that market has formed a shooting star pattern at the resistance, and market also looks very overbought. So as a result, there may be some correction in the coming days as well. And in case market tries to go up, okay, in case market shows recovery right after the market opening, then we have got few minor resistances also, 1.2282 and 1.2322. These two are minor resistances. If market goes up, then observe the market around these two levels, 1.2282 and 1.2322. if you see the market is struggling around this level, market is showing price rejection from above, market forming shooting star kind of a pattern, you can consider taking a sell position as well. So these are not for swing traders or positional traders. Okay, these are some quick selling opportunities. Okay, where you can expect to make around 30 to 40, 30 to 50 pips, okay, if market reverses. In case market breaks 1.2282, then 1.2322 will come into the scene. The reason behind considering these two levels is, again, we are using Fibonacci retracement here. Okay, Fibonacci plus we can also see that previously these levels have got some acted as some kind of a support in the lower time frame as well. And the ultimate resistance on the chart of GBPUSD is at 1.2450. In case by Tuesday, Wednesday, Thursday, Friday, okay, market shows good amount of buying, then if market breaks 2450, then only we should consider taking a buy position. So as of now, okay, I think that if market breaks this particular level, we can go for a sell. If market goes up and reverse from these two levels, we can go for sell. And if market breaks and comes to 1.1950, 1.1900, and market takes support, then only we should consider taking a buy position. And if you want to take a buy position at the market opening, okay, then I will not comment on that. Okay, I'm just leaving the decision to you. So overall is the scenario on GBP USD right now. And if you want to look at the chart of DXY, then let me take you to the chart of DXY. Yes, after this massive fall, DXY again trying to recover, and this time, okay, DXY is resembling the chart of Euro USD. So here the trend line at the top was acting as dynamic resistance, and right now we can see that DXY closed above the 50 moving average as well as above the trend line. The road of DXY is not very simple because we have multiple resistances, as DXY was in a long dominance of the sellers. Okay, but still it is trying to recover. For DXY, I think 105, 105.80, 105.80 to 105.60 will be the next resistance. Okay, and if you look at the chart of if you look at the Forex sentiment meter, then in the Forex sentiment meter we can see that only 41% traders have taken short position and 58% traders have taken long position. And as we all know that usually market move against the sentiment meters, because the sentiment meter shows the position of the retail traders. So if we focus on the sentiment meter, then yes, again there is a good possibility that market will show some selling just to trap the buyers here. Okay. Anyways, this is my analysis. I can be wrong as well. So please follow proper risk management. Do not gamble with your hard-earned money. Bye bye. Take care. See ya on Monday.